Imagine this. You buy a $100 gadget from China, but at the U.S. border, you're slapped with a $145 tariff. Yes, you now pay more in tariffs than the product itself. Sounds insane? Well, in April 2025, this became reality. President Trump imposed a 145% flat tariff on all Chinese imports, and in return, China hit back with its own 125% tariffs on American goods. Now things are spiraling fast, and today we explore the most extreme card China could play in this war. Dumping U.S. government debt, a move that could shake the entire global economy. 1. A trade war gone nuclear. This didn't start at 145%. It built up layer by layer. February 4th, a 10% tariff was imposed on all Chinese imports. March 4th, that rate jumped to 20%. April 2nd. On Liberation Day, Trump added a 34% tariff, bringing the total to 54%. April 9th. After China retaliated, the U.S. added another 50%, pushing it to 104%. April 11th, finally, the White House confirmed a cumulative 145% tariff. American importers were in shock. Businesses panicked. Prices soared, and the global markets started to wobble. This wasn't an economic strategy, it was financial warfare. 2. Why the U.S. deficit keeps growing? Let's zoom out. The U.S. has the biggest trade deficit in the world. China has the biggest trade surplus in the world. This is the very backbone of global trade today. America buys, China sells. But wait, why doesn't this balance out? In theory, trade deficits can't last forever. They push a country's currency down, making exports cheaper and imports more expensive. Take India, for example. When India imports more than it exports, it needs to buy foreign currency using rupees. But fewer countries are buying rupees in return, so the rupee weakens. Eventually, this makes Indian exports cheaper, imports more expensive, and trade balances itself. But with the U.S., that doesn't happen. Why? Because the U.S. dollar is the world's reserve currency, and countries like China just keep buying dollars. 3. China buys American debt a lot. When China exports goods, it earns U.S. dollars. But instead of letting those dollars strengthen the yuan, China does something clever. It prints more yuan and uses them to buy dollars. Then it buys U.S. Treasury bonds, lots of them. As of early 2025, China holds about $800 billion in U.S. debt, down from its 2010 peak of $1.3 trillion, but still massive. That doesn't even include mortgage-backed securities, off-book holdings via state entities. Why does China do this? It weakens the yuan. It helps America keep spending, and it keeps the trade flowing. This strange partnership even has a name: Chimerica. America buys, China lends. 4. What if China pulls the plug? Now here's the scary part. If China sells off its U.S. Treasuries, this becomes a financial nuclear option. It would drive interest rates up, shake global confidence in the dollar, trigger a full-on market meltdown. In normal times, this would just hurt the U.S. a little. But 2025 isn't normal. Treasuries are being dumped at record speed. Investors are fleeing. Yields are spiking. America is dancing on the edge of default. If China adds fuel to this fire, it could tip the U.S. into economic freefall. 5. Why China hasn't done it yet. So, why hasn't China done it? Simple. It would hurt them too. A stronger yuan makes Chinese exports more expensive. Plus, treasuries are still safe, liquid, interest-bearing. But if Trump keeps pushing, China might feel it has nothing to lose. In 2008, China refused Russia's plan to crash U.S. markets. But this time feels different. This time China might say, if there's going to be a crisis, it might as well be on our terms. 6. The dominoes are already falling. It's already happening. China sold $51.3 billion in treasuries in Q3 2024, its second biggest sell-off ever. Japan is selling too. Australia just lost $71 billion in market value. Global investors are nervous. The world's two biggest economies are colliding with no brakes. This isn't just a trade war. It's a high-stakes economic chess match, and the final moves could reshape the world. If China dumps U.S. debt, could it crash the entire global economy? Drop your thoughts in the comments below.